Looking to buy, sell, or grow your business to position it for a sale? As the owner and managing partner of Sun Acquisitions, Domenic Rinaldi has personally been involved in over 300 M&A transactions. He has seen and done it all, consulting with large and small businesses across a broad range of industries. On M&A Unplugged, he'll interview buyers, sellers, and their advisors about their experiences scaling, selling, and acquiring businesses. On every episode, you will get key learnings, but most importantly, you will be better prepared for your own acquisition or sale. This is M&A Unplugged with your host, Domenic Rinaldi.
M&A Unplugged community, if you want to know what it takes to secure a business acquisition loan, then you landed in the right place today. I will be talking with Steve Lasiewicz, who heads up the SBA Lending Unit for Busey Bank. I've known Steve for almost 15 years. And over that time, I've had the opportunity to work with lots of bankers. And I can easily say that Steve plays in the big leagues. Steve has that unique combination of expertise and deal making. He can help parties navigate difficult obstacles during the loan process to secure great outcomes. Steve's been in banking since the early 90s, and he's seen and done it all when it comes to loan origination and funding. Steve, great to have you here today and excited to have you share your knowledge with the M&A Unplugged community. Welcome.
Thanks, Domenic. Thanks for having me.
So, Steve, seriously, not to embarrass you or anything, we've known each other for a long time, and you're seriously one of the best SBA bankers I know by far. But I'm curious, how did you wind up in banking and then specifically SBA lending?
Well, I never wanted to do banking. I graduated from college, DePaul University, did what I wanted to do, which was be a stockbroker. And then during the early 90s, the internet trading came along and kind of killed that industry for stockbrokers who wanted to basically trade accounts for customers. And the trading platform kind of went away, and so did I. I got a call from GE Capital. GE Capital wanted to hire me into the SBA division, teach me everything about the SBA, and off I went. I worked for GE Capital for about 6 months, learned the whole process, and after 6 months, another SBA lender came along and said that they had heard what I had brought in already through GE Capital and went to go work for a company called Allied Capital, which turned into Business Loan Express, which actually turned into be the second largest SBA lender before the financial crisis.
Wow. So not only did you launch into SBA kind of by default, but then you land with one of the, best of class companies in the world at the time, GE. What a way to learn and launch your career into SBA.
Yeah, they really knew how to teach you how to sell SBA lending and actually be able to bring the customers in with the best possible scenarios for what they're looking for.
So I'm curious, back in the day, when you say SBA lending, was it acquisition loans back then, or were they doing different things with SBA at the time?
I mean, primarily what GE was asking us to look for was equipment financing. So basically customers that were looking to either refinance their current equipment or just new equipment purchases. They would do some real estate deals back then, but very little. And business acquisitions really weren't even on the spectrum at GE back in the day.
So when did you first start getting involved with SBA acquisitions? Can you remember, where you were?
Yep. So when I was with Business Loan Express, one of the head credit people, when I was bringing in all these equipment deals, said, you'd have it so much easier if you just concentrated on acquisitions of gas stations and hotels. That's kind of a third of what most SBA lenders out there have in their portfolio is gas stations, hotels, and restaurants. And I started off lending to some gas stations and hotels, became an expert in that industry, and then economy kind of hit a downturn. The hotel industry was heading down, and I had to try and find a new niche. And one of the lending managers that we had out in California brought to the table business acquisition loans. And I'd never heard about business acquisition loans. I've been doing acquisition loans for kind of real estate purchase businesses like the gas stations or hotels, but nothing where it was just pure like a manufacturing company or a service business that wanted to sell the business to some third party. And that was my first introduction into that. And kind of it brought me back to my stockbrokering days where we raised private equity for some small businesses. It got me back into what I really loved to do and what I originally wanted to do with my career, and got me over onto this side of the acquisition lending side for, with the SBA.
So let's talk a little bit about SBA loans for the M&A Unplugged community, folks out there that, maybe are looking to acquire a business or recapitalize in some way. Let's talk a little bit about the advantages of an SBA loan and what really that brings to the table for an owner and for a buyer.
Okay. When I typically talk to customers, I let them see what potentially is out there from a conventional standpoint and from an SBA standpoint. From a business acquisition, 90% of the business acquisitions that we see here at Busey Bank are undersecured transactions, which means they don't have real estate, they don't have a lot of heavy equipment, they don't have a lot of inventory or receivables that a lender can take as collateral for the loan. A conventional loan is fully secured in an asset base. The SBA, which is the benefit of the SBA allows you to finance undersecured transactions. And it's mainly based on the cash flow of the business that you're financing.
So you were brought in to Busey Bank a couple of years ago to build up their SBA unit. And, early indications are you're doing a hell of a job over there. Tell us about your approach at Busey to the market when it comes to SBA loans, what you focus on, how you help buyers and sellers.
Well, the first thing when I got here.
And how long have you been there now, Steve?
It'll be 2 years in November.
Awesome.
So the first thing I concentrated on was setting up the back office side of the bank, making sure we had enough underwriters, make sure we had enough closers, make sure we had the staff to basically execute on transactions. So the first people that we hired a senior credit person here, right here in Schaumburg, Illinois, right basically in my office. We hired closing people to basically take care of all the closing side. And all these people, 100% of them are 100% dedicated to SBA. So we set the back office up first, and then I went out and started bringing in the sales team. We had 3 or 4 people that were bringing in SBA loans to the bank back in 2017. I've increased that to 9 people today, and we're now set up for kind of a cookie cutter transaction that comes in, can get underwritten right away, get approved, hand it right over to a closer who's only doing closing, take care of the closing from start to finish, and then execute on it afterwards.
So, Steve, then talk about, your focus in the market. Are there particular industries that you're focused on, or are you pretty industry agnostic? It's just more about the nature of the deal and the parties in the deal?
Yeah, so it's all about, when I did my due diligence to come to Busey Bank, that was what my biggest concern, leaving a larger national bank in U.S. Bank. I wanted to make sure that the credit box was wide open. And when I talked to the senior credit officer here at Busey, I asked him specifically, what industries do you not want to lend to? And at first he said, he didn't want to, there was really nothing that he wouldn't lend to. So construction companies, restaurants, gas stations, hotels, typical industries that most banks steer away from, he was willing to look at those transactions. It was about a half-hour conversation. I stood up, I was walking out the door, and he said, wait, Steve, there is one industry we don't want to finance. And the one industry, I said, what's that industry? And he came back and said, we don't want to finance any golf courses. And I said, you know what? I can live without lending to golf courses as long as everything else is open. So from a concentration standpoint, from my division, I would say 70 to 80% of what we financed this year and last year have been business acquisitions. It's either partner buyouts, it's third parties buying out another entity, or some kind of transition from, one person to another.
I want to come back and talk about partner buyouts because I think that's a unique opportunity through the SBA. So I'm gonna park that for a moment. Let's talk about, I think for the M&A Unplugged community, understanding what it takes to get and secure an SBA loan, I think is really important. And so from the bank's perspective, do you have a checklist or, items that, really matter when somebody comes to you with a deal and says, I would like to get a loan to acquire this business? Do you have 3, 4, 7 things that really matter from the bank's perspective?
Yeah, I mean, here's pretty much what we look for. So when I'm looking at a business acquisition, I look at it from both sides. So I look at it from the buyer side, look at it from the seller side. From the seller side, and the information I get from the seller, I'm looking at the trends of the business. I'm looking at how reliable are the numbers that I'm looking at. So the financial statements, the tax returns. I'm looking at, what expertise, what knowledge is needed to run and operate that business. And then the last question I usually ask, the buyer of the seller, why is the seller selling the business? So from a trend standpoint, what am I specifically looking for? I'm looking for cash flow and revenue. Is it going up? Is it going down? Is it flat? Is it stable? Is it unstable? Is it what we call predictable? So is it 1 year it's $500,000 in cash flow, and then the next year it's $1 million, and then the next year it's back to 500,000, or is it 500,000? 3 years ago it's 600,000. 2 years ago it's 700,000. Last year, and it's on pace for $800,000 this year. So that's what I'm looking for from a trend standpoint. And then how reliable are the numbers? The financial statements, have they been cleaned up already? Meaning, is the seller still taking out a lot of personal expenses from the business? Are we relying on a lot of add backs? Are the numbers accurate? Is the balance sheet add up? Does all these things add up? The cash flow, is it easy to read, understand? The add backs, that are there, are they verifiable? Or, they don't know how, they just know that they spend about 12 grand a year on a credit card for personal expenses. And they want us to trust the seller that those expenses are going away with a new buyer. The expertise and knowledge to run the business. Are there barriers of entry into that industry? Do you need specific licenses to run the business? Is it equipment intensive? Is the product or service that they offer proprietary? Or can anybody sell it? And then why is the seller selling the business? Is he selling it because he's retiring? Is there a family feud going on, and the family just wants to buy out one of the family members? Does he have other businesses that he owns, or is he just tired and just wants to get out? Or a lot of times, sometimes you hear from the seller, I started this business, I never knew it was ever going to get this big. I just don't know how to run and operate a business this big. So I feel uncomfortable. I just want to get out.
Yeah, Steve, that's such great information for the M&A Unplugged community. If you're an owner of a business and selling the business is, on the horizon somewhere, Steve has just laid out some really important things, because some of the things you may be doing with your financials today are fine for you and the way that you run the business, but they may not be fine when a buyer needs to take your package to a bank and try to get a loan. And you need time to work on those things. That doesn't happen overnight. You're going to need a year, maybe 2 years to make sure that you get your house in order. And, the statistics, Steve, are not good from that perspective. There's a lot of surveys out there. And the last one that I saw is that 75% of owners don't prepare for a sale or a succession. And so lots of opportunity for owners to clean up their books and their records and get the business in good, shape, so that it's smooth sailing when a buyer comes along.
Because, the bank financing that has to come along with that is usually, how many times have I ever seen transactions where the borrower wants to put 50, 75, 100% down? It's very few and far in between.
Yeah, correct.
They need bank financing. And the only way you can get bank financing is if the numbers add up and you can justify the numbers that you're telling us the cash flow of the business is.
Yeah. And, Steve, it's not even a matter of need many times, right? With the interest rates being what they are and the terms with SBA loans going out 10 years or more, if there's real estate involved, right? It's advantageous for buyers to secure a debt facility on the business, and it increases their cash flow, increases their odds of success long term, right? If there's something that happens in the business. So it sort of makes a lot of sense on many levels. And being able to secure a loan is key for ultimate transaction.
Leverage used the correct way makes sense. It's what makes the wealthy wealthier, because they know how to use debt the correct way. And leveraging debt for buying a business, is 9 times out of 10 probably the smartest way to go.
So, Steve, let's take it from the other side, from a buyer's perspective. Is there a checklist or some things that you look at from a buyer's perspective when they bring a loan opportunity to you?
Yes. So the first things I ask the borrower when they come into my office is, what's your experience at running and operating a business? Listen to what their story is. I want to know, when they're walking in here with the purchase agreement or walking in with a letter of intent saying, I'm trying to buy this business. The first thing, do you know and understand the business that you're buying? Other key questions I'm asking and talking about is your equity injection. Where's that coming from? Post-loan liquidity. How much money do you have after your equity injection? Do you have a business plan put together? Do you have detailed projections? And then the last thing I ask for, which is what we assume in all business acquisition loans, is your personal credit. I assume every single person that walks into my office has very good, if not perfect, credit.
And is there a benchmark on that, Steve?
I would say 680 or better, usually, from the majority of the partners that are buying in. But, experience, do you have experience in owning and operating that business? Or is it transferable experience for that industry? Have you ever owned, or do you currently own a company? And then understanding the business that you're buying, do you understand the cash cycle of the business? And what I mean by cash cycle is, if I owned a gas station, I buy gas from the supplier, I put it in the ground, someone comes up with their car, fills up $20 worth and hands me a $20 bill. So the cash cycle is, I pay the supplier $20 to put $20 worth of gas in the ground. Somebody comes to me, pays me $20 for it. Cash cycle is, a day or so for that transaction. Versus like a manufacturing company, the cash cycle could take, 30, 60, 90, 180 days. So I'm buying a product, I'm converting that product into what my end product is, and then I'm going out and selling it. So when I'm buying my inventory, how long does it take to convert it into what my end product is? And then from when it's my end product, how long does it take me to sell that product? And then once I sell that product, how long does it take me to collect the cash from whoever bought that product from me? And that's important for a buyer to know, because that's how much working capital that they're going to need. Because if it takes, let's just say 60 days, I need 60 days of rent, principal, and interest payments, my fixed costs of running and operating that business.
And Steve, do you guys help buyers with this phase as far as, helping them understand? And will you provide working capital lines to them that are sufficient to operate?
Yes. So my team of sales guys that are here average about 15 years in SBA. So they know and understand small business. They know and understand, what potential problems a buyer is going to go through. We want to know that the buyer kind of understands the business, but we can kind of assist them along the way in understanding what the full cash cycle would be of the business from start to finish, and then what kind of working capital they would need. And yes, lines of credit then come with our business acquisition loans if that cash cycle, exceeds how much money they're going to have in the bank or have, as permanent working capital for the loan. The equity injection, where's that coming from? So is it coming from the borrower himself or herself? Is it coming from a family member? or are they raising equity? Any one of that is important to know and understand upfront. Post-loan liquidity. This is one of the most important things that kind of happened after the financial crisis. Banks are basically required to figure out how much post-loan liquidity the borrower has after the loan closes. So if I buy a business today, for math purposes, say $1 million business, $300,000 in cash flow, he's required to put 10% down, so he puts $100,000 down. How much does the borrower have in the savings account after he made that $100,000 equity injection? Does he have a month? Does he have 2 months? Does he have 6 months? Does he have 12 months? Typically, we like to see 3 months of liquidity in the bank, so the borrower, if there's any hiccups along the way, the borrower doesn't fail right off the bat.
And Steve, when you look at that, are you looking at household income? So if there's a spouse or significant other, or are you just isolating the borrower against that loan? How do you look at that?
Great question. So we look at the global. So we'll look at the husband and wife in a transaction. So
or significant other.
Or significant other in the transaction, right? So if you have outside income that's coming in, you can take that outside income and offset the personal expenses. And then if there's excessive personal income from outside, you can even offset the personal liquidity or from the business liquidity from the business standpoint.
Wow. Okay.
I guess the fifth point that we had was, a detailed business plan with detailed projections. I've never seen projections that don't work, which is always amazing. That I would think that no business would ever fail, because if every business hit all their projections, they would never fail. But people need to understand exactly where their projections are coming from. So typically what we ask for is a month-to-month projection for the first year, and then we ask for 2 additional years of just projections for the business operation.
Well, and I think that's so smart, because it really makes people think through month in and month out really what that business can do. And they might even be surprised. It's so important, especially for businesses with seasonality, or businesses where they're not going to get paid upon delivery of services, right? So is there a business plan template or format that in your years of doing this that you recommend to people if they don't know where to start?
The Small Business Administration has what's called the SBDCs, which is the Small Business Development Corporations. And they're throughout the country. In Chicago here, we've got one downtown. A couple of the community colleges have SBDCs within the community colleges. And it's basically offices that are set up to help small business owners take care of projections, take care of business plans. They can do some research for you. There's a great show that's on right now. I think it's on CNBC. It's the Billionaire something. It's about a billionaire who said he wants to make sure that the American dream is still there. And he basically leaves his cush lifestyle, and with $100 is trying to grow a business into a $1 million business within 90 days. And he's at day like 85 right now, but he's using the SBDC in Pennsylvania, and it goes through within that program how good and how much help they basically offer to small business owners. And it's a great resource that everybody has right in their backyard.
Well, we're going to try to find the link to that show and include that in the show notes for the M&A Unplugged community. That sounds like an awesome show. And having been exposed to the SBDCs, and I've spoken in front of owners and buyers many times over the years, they're a tremendous resource. So I think you're absolutely right. I think that's a great call.
Yeah, I'm hooked on it. Kind of like Shark Tank. It's kind of the next Shark Tank, because it actually shows somebody who actually builds and develops a business and a business plan from start to finish. I'm interested to see if it's worth $1 million at the end of the show, but I think there's 3 or 4 more episodes left.
So, Steve, is that it from the buyer side? And your last one was credit, which was personal credit. Pretty obvious, I think. There's 680 or above and clean credit, right?
Yep, and those are the things that we kind of look for from the buyer side, from the seller side.
So you had mentioned earlier partner buyouts, and we've been involved in a few of these, actually in the middle of negotiating. But turns out that the SBA has a tremendous program, right, for partner buyouts, and they look at that, in a very unique way. So can you talk a little bit about that?
Yeah. So partner buyouts is different than a business acquisition because, if you and I were 50-50 partners of a business, I'm ready to retire and you're not. The SBA would consider, so if it's a business acquisition where some third party wants to come in and buy out our business, the minimum down payment has to be 10%. With a partner buyout, the SBA considers the equity that you or I have in the business as the equity that's needed for that transaction. So if our business combined is worth $1 million, it has, let's just assume it has no debt right now for math purposes. My equity is worth $500,000, your equity is worth $500,000. A $500,000 loan can be done for that transaction to buy out the partner that's ready to retire.
So essentially, it's 100%. You're loaning the remaining partner 100% to buy out their partner.
Exactly.
Yeah.
And then we can add, if working capital, usually what happens in those situations is whatever the cash is that's in the account, you split it up 50-50. So it might leave a strain on the operating business. But what happens is we can come in and potentially lend them additional permanent working capital or then give them a line of credit on top of that.
We've seen more and more of this in the last couple of years. And our involvement has been helping the partners understand the value of the business. So, what's the number so that they can agree on something, helping them negotiate through that. And then I think what you offer by, providing 100% buyout is outstanding. It's a great, great tool for partners that are looking to do something like that.
Yeah.
So Steve, wrapping this up now, taking, 50,000 foot level on lending and SBA lending, if, you were to put a bow on how people should approach and look at SBA lending, what advice would you give to a buyer and seller other than the checklist items, looking at it from a different level? What advice would you give buyers and sellers?
From a buyer standpoint, you have to work with a lender who has experience in the industry. When I was at, one of the largest banks in the country, I was there for 10 years. I educated all my bankers about the SBA program, and then they went out and tried to sell SBA to customers. And they would be the first line of fire out there, but they knew 5 to 10% of what I know. So they're trying to sell a product, and in the end, it never really worked that way. So the first thing you have to do is find a lender that knows what they're talking about, knows the SBA program up and down, left and right, knows the rules and regulations. Every October 1st, a new standard operating procedures manual comes out for the SBA, and there's changes every single year.
And what is that thing, like 40,000 pages?
Oh,
you got to be unbelievable.
It puts me to sleep every night. So it's probably 550 to 700 pages.
Yikes.
A paperless industry. When I got into the business in 1999, they said, we're going to be paperless within the next 10 years. And I think, the packages keep getting bigger and bigger and bigger every year. But, finding a lender that knows what they're talking about is the key, because structure is so important in a business acquisition. Getting the right structure for your deal that's acceptable to you as the buyer, but it's also acceptable to the seller. Because who cares what the lender says if it's not something that's agreeable to both the buyer and the seller? So finding that lender that knows how to structure a transaction up front, knows that structure is eligible for SBA financing, is probably the number one key component in finding and successfully closing on an acquisition.
Steve, we just had a deal that we closed, and to illustrate your point, the buyer had a previous relationship with a banker. Even though we had a banker lined up on the deal and we knew what the structure could be, the buyer was pretty insistent that they wanted to go to their banker, who clearly didn't have a lot of experience in this world. And sure enough, 2 months later, came back to us and they didn't get the loan. We then promptly walked them over to the banker that we had been working on that particular deal with. And 2 months later, we were at the closing table. And so your point is so right on. And I think it throughout the transaction, involve people who really understand M&A transactions every step of the way. Attorneys, accountants, brokers, lenders. It's just going to make for a better transaction, and also maybe help you walk away if you need to walk away, so because there's that side of these deals as well.
It happens so many times where a client, has a good relationship with a bank or a banker. That banker has no idea about the SBA program, the rules and regulations, thinks he can get a deal done because he heard from his SBA specialist within the bank that they can do business acquisitions with 10% down. And then you find out 60 days later that, that bank doesn't really do SBA business acquisition loans above $500,000 or $1 million. I mean, because Busey Bank is a business acquisition lender from the SBA's perspective, I know and hear through the SBA grapevines who's doing what and who's not doing what. So finding out that a regional, non-bank lender just last month who was doing up to $5 million in business acquisition financing is now only looking at business acquisition loans $1.5 million and under is important for me. Because when a borrower comes to me and says, I'm talking to you and I'm talking to this other lender, I can point to them and say, all right, I already know this lender, that lender, and this third lender at that firm. I've confirmed with them that they're only looking at business acquisitions up to $1.5 million. Your purchase price is $3.5 million. They're not going to be able to get it done. And that's important information, is knowing and understanding. There's a lot of lenders who want to do the business acquisitions 500,000 and under. It drops off. There's some other lenders that will go from $500,000 to about $1.5 million, but there's only a handful of lenders that want to do that $1.5 million to $5 million range. And that $1.5 million to $5 million range might be 5 or 6 lenders in the entire country that want to do those. So trying to find the lender in your market that wants to do those transactions is tougher and tougher every day.
That's what makes you such a good banker, Steve. And, really nice to see what you've built over at Busey. They made a great decision when they brought you in to head that up, and certainly bearing fruit for everybody. So, Steve, if folks in the M&A Unplugged community wanted to get in touch with you, how could they reach you?
They can reach me via email at steve.lasiewicz@busey.com. So that's steve.lasiewicz@Busey, which is spelled BUSEY.com. Or they can call me in the office at 630-237-2605. That's 630-237-2605.
Steve, thanks so much. It was great to have you here today, and it was some awesome information.
Thanks for having me, Dominic.
So just to summarize a few things, M&A Unplugged community, that Steve brought up, he hit some really key things from the seller's perspective. Your business, when you take it to market, when a buyer comes in and makes an offer, is most likely going to need a loan. And in order for your business to be financeable, you need to really care and focus on a few things. What are the trends of your business? The numbers, your financials, are they reliable? Are they consistent? Is the balance sheet, the numbers in the balance sheet, accurate? Inventory, net working capital, which is your current assets minus your current liabilities. And ultimately, are you really ready to sell the business? So if you do bring it to market, are you prepared to go through the pain of actually having to work with somebody and their banker to get the deal done? On the buyer's side, Steve brought up some great points here. You make sure that you've got experience, that can be transferable and relatable to the industries that you're focused on. Understand where your capital is coming from and how much money you're going to have left over after the transaction. Banks are going to care about this. know that you're going to have to present a business plan with projections. And Steve brought up the SBDC, Small Business Development Corporation. They're in every major city, tremendous resource. I've personally had the opportunity to work with them. I highly recommend. These are great people that work, they're volunteers actually, but these are successful ex-business owners who really can help you navigate through all the various pieces. And even after you make an acquisition, there are various people that can help you understand how to market anything that you need. They're really a great resource. So hope you enjoyed today's episode. All of the information will be available in the show notes. If you would like to learn more about the process of acquiring or selling a business, please visit our website at sunacquisitions.com, or feel free to reach out to me at drinaldi@sunacquisitions.com. I look forward to seeing you again on the next episode of the M&A Unplugged podcast. And until then, please remember that scaling, acquiring, or selling a business takes time, preparation, and the proper knowledge.
Thank you for joining us today on M&A Unplugged. If you enjoyed the show, please subscribe, rate, and recommend it wherever you get your podcasts. If you want more great information on how to scale, acquire, or sell a business, please visit our website at sunacquisitions.com.